Executive Chairman of GCP Global. Gabriel, good to have you on the show.
You bet, Brian.
And I love the cap.
It's a hat.
Sorry about that. I stand corrected. Now, before we get your insights, Gabriel, let's take a look at how crypto markets are performing, and then we'll take a look at how regional markets have been performing. So,
very interesting month, interesting period. We survived September, no major crash, no major corrections amounting to 10%, as what many of the prognosticators have actually mentioned. But bear in mind, of course, with 2 more weeks left for the month of October. October has always been a month of major changes. So on 19 October 1987, 13 October 1989, as well as the global financial crisis, got into its worst track in October of 2008. I think essentially this time around, things are looking so much better. I mean, with S&P, 8% of the S&P 500 companies have reported, that's 41 companies. Last week, the banks reported good set of results in line. This week, you have the likes of the food companies like Chipotle, as well as Domino's Pizza. And I know you love pizza, so I'm sure this will go up. And then you actually have the Chinese tech reporting and the REITs reporting in Singapore as well.
Now, I want to drill down on the recovery in China tech. Which are the ones, and you are heavily invested in China tech, which are the ones that have outperformed the market?
Well, I think the ones that we have invested in as well is what Charlie Munger did as well in Alibaba and Tencent are actually leading the rebound. But at the same time, the likes of JD.com, where Cathie Wood's the art innovation fund is in, are actually riding upside together with us. The other companies are like, for example, NetEase, which is actually just launched its new game, which is Harry Potter's game, and just last month, Brian, that game grossed in renminbi $981 million, almost $1 billion in a month. Can you imagine?
Wow, that's incredible. Now, we want to look at activity closer to home, something more conservative but still very profitable: REITs. Now, the ESR REIT is poised to go ahead because shareholders have given the green light. Tell us more about that, and why is that a good thing for both parties?
Right. I think when it comes to REITs, getting larger and bigger, it's key. For example, in my next upcoming YouTube video, your subscribers can come to Gabriel Yap YouTube video, and then we will actually show you that because of the savings that we are getting, from the ALOG's cost of funds is 2.92%. Now, after the proposed merger, the effective cost for the merged entity will be at 2.25%. It's a huge savings, Brian. And just because it is not distilled inside the materials, the presentation decks, 34 pages, and then you actually have to goggle out your eye to actually see the between, which is very small, So what we do at GCP Global is that we will ferret out this information, we will convert this data based on the assumptions that the REIT has used into useful evidence for people who sign up for our classes and our next coming class 13 November, to actually synthesize and make a proper decision. Because when it comes to REIT prime, as we've said many times in the program, a good REIT, a good offer price, is as good as the assets that they own. So if you're a learned investor, you must be able to decipher and work out the numbers, from the properties that they own. And this is exactly what we're going to do for the ESR ARA logos merger.
Now, Gabriel, as always, thank you very much for your insights, and thanks for coming on the show.
Thanks again, Brian.
Now, we've been speaking to Gabriel Yap, Executive Chairman of GCP Global, on BizTech's Asian